Looking at the FX space, as I was saying earlier in the week, I'm not necessarily focusing as much on the likes of euro, dollar and cable, bearing in mind everything that's happening in terms of Italy. Also, everything that's happening in terms of Brexit means that those two markets are very heavily reliant on news flow, and a lot of that news flow is not necessarily scheduled. So, you can see a comment coming out any day from someone on either side of the Brexit negotiations telling you that it's looking better or worse, and of course that's very hard to mitigate as a trader. So I thought I'd wrap that up once again with the euro sterling pair. Let's just quickly get onto that. The wider context, if we look on a weekly time frame, shows you that we have got this uptrend in play more recently. The breakthrough 89.68 points towards this potentially being a retracement, and so far we've respected the 76.4. So are we now going to start regaining ground? Certainly this week we are in the red, but that comes off the back of a gap higher at the beginning of the week. So are we going to start regaining ground despite the fact that we're losing ground at the moment? So this is the daily time frame. You can see here we've got a nice move higher, but now drifting lower. Let's go on to the 4 hour. And we can see this, right? So we've regained ground from the 76.4. We've managed to break through this sort of near-term swing high around about 88.06. We've pulled back. Let's see if we've got a Fibonacci around about that area. So we've come into a deep retracement, not necessarily a fib, so 70%. And now we've started regaining ground. Certainly if we look at the hourly time frame, we can see that we are creating these higher highs and higher lows. Relatively deep retracements, though. We can see maybe trendline support coming into play. So yeah, trendline support here now starting to turn higher. So looks like a good chance that we're going to start pushing onwards and upwards from here. Certainly a breakdown through any of these near-term swing lows, the likes of 87.70, the likes of 87.64. That would certainly be a warning sign that we are going to see a continuation of what is a relatively long-standing downtrend that we've been seeing over recent weeks. But certainly, considering the fact that we've come into that 76.4 and considering the fact that we have got this uptrend in play over the real long term, I think there's a good chance that we are going to continue to regain ground from here. Aussie dollar, as many of you will know, is a sort of favourite currency pair of mine at the moment because of this very clear downtrend we've got since this double top formation. Now, we have been regaining ground, certainly last week, largely flat this week. And you can see that we have been pushing higher. Then we saw this drop, and that drop certainly gave us a potential signal to short this market. If you look at this market, we can see this rising wedge formation. The breakdown below your first swing low at 71.12 gave us the next rally upwards. That rally, essentially, because of the fact that you've seen, and this is a great example of how to play wedge breakdowns, because of the fact that markets had doubts that some people thought we were going to continue moving higher, some people thought we were going to be breaking lower because of the fact that we're breaking from this wedge formation. But given the fact that we broke below the 71.12 mark, that means that the next rally, to me, is going to falter and not break the previous high. That means that because of the fact that we've got arguments on both sides, some people still think we're going to come back into trendline resistance. That means we often get a deep retracements. You're often going to get those deep retracements on these turning points rather than on very highly trending markets. So we come into what certainly would have been a 76.4 retracement and some maybe. So yeah, we pushed past the 76.4 and now we've sold off. So that kind of setup, if we'd sold it around here, that would have been a 3-to-1 trade just to break below the low. So we have broken below that low. We're starting to regain ground. Essentially, more of the same is expected as long as we don't break this swing high at 71.51. Excuse me. Then this rally that we're seeing at the moment looks like a shorting opportunity for this market to roll over once more rather than a signal to be buying. Bear in mind, we did see those economic releases coming out of China and the GDP figure remains towards the downside. Trade talks between US and China, by and large, seem to not even be scheduled. So I do expect to see further downside coming into play for the Aussie dollar following this wedge breakdown. And on a similar kind of note, we've got the New Zealand dollar. Now, certainly this has got a similar kind of look to it in that we've got this very clear downtrend, great market to be looking at here. And we can see if we're looking at the Fibonacci and looking for retracements to be selling into, we've come into the 61.8 and sold off. If we go on to the 4 hour, we can see this, it's got a little bit messy, quite frankly. We can see that this is potentially one retracement of, because we, what I generally look for, if we're looking for, let's say, the creation of higher highs and higher lows, lower highs and lower lows, determining whether we're in an uptrend or downtrend, and certainly when you're breaking out of that, there's a lot more validity to a breakdown below your previous swing low on the way up, i.e. one of these levels breaking below that level, rather than creating a higher low and then breaking that one before breaking to a new high, if you understand what I mean. So the fact that we have broken lower but then broken lower again without breaking the previous high looks like almost like an ABC retracement for all of you Elliott wavers out there, and certainly we're starting to move higher once more. So there is a good chance, certainly with the fact that we're breaking through 65.78, that we're going to move into a deeper retracement. But like I said, that long-term downtrend remains intact. This area looks like a really good area to be looking for shorts, between your 76.4 and your 61.8. That's 65.94 up to 66.34. As long as we can get shorts around about that area, that looks particularly attractive to me. And if we break through 66.99, then that's a signal that I want to be out of the trade. So let's just take it back to that daily time frame and show you this downtrend very much intact. Look out for that resistance zone between the Fibonacci's, and that for me looks like a really good shorting opportunity for Kiwi dollar.